Hello everyone, welcome to the Paoli Group's monthly market update, where we're trying to provide you, our viewers and our clients, some market information in all categories around the real estate market, be it commercial, residential, or ranch and rural properties. We're here on one of our market listings. We're on the Elk River and enjoying the fall colors and fall weather, so we're happy that you're joining us. I'm Brian Ripley, and I specialize in ranch and rural properties for our team. And the ranch and rural market is a little unique. We see trickle-down effects from the greater market, things that happen at the ski area and in the city itself. Obviously, there's some development pressure, so land surrounding the town still sees good demand, and we're seeing land change hands. You see that as well in places like Oak Creek and specifically Hayden. Hayden's a market, a bedroom community where land around the town of Hayden has really changed hands recently with the idea, I think, of some developers looking to expand housing opportunities, commercial opportunities, things out there. But as we go further into the rural market, the market slowed up a bit here this fall. We are seeing what I would call gentlemen's ranches or ranchettes, those 35-acre properties, maybe horse properties. The days on market are really increasing. There's properties that have been on the market for the entire summer selling season, or we're seeing days on market even double in some cases. There's a bit of a waiting game, I think, going on between sellers and buyers. We are seeing some price reduction on average, and those types of properties, those ranchettes, the recent data is showing about a 9% on average price reduction for those properties. But it's not dead. Buyers were still actively showing properties, but I think, again, the overall economic conditions have people just really waiting to make sure that they're not buying at the top, waiting to see if prices reduce. But at the same time, sellers aren't eager to reduce, and they're being patient as well. So like I said, a little bit of a waiting game. As we look at larger ranch type properties, it just depends. There's a lot of categorical differences. If we have a really good hunting property, or those properties that have attributes for recreational pursuits, they can move rather quickly. But those more agriculturally based properties, they've been on the market across the board, across our entire Northwest Colorado region, or even nationally. Like we certainly keep track of what's going on nationally, and you see price reductions and again, days on market increasing on agricultural properties. So that's kind of our quick fall update for our ranch and rural properties, but we'll turn it over so you can get a snapshot in our other categories as well.
Hi, my name is Sias. I'm the commercial broker on the Paoli Group team. A little update on what's been happening in the Valley. A couple things that we look at for the strength of the market. Number one is leasing. We do a fair amount of leasing. And it used to be sort of analogous to big game hunting. Even if you had a good spot downtown, you had to sort of seek out a tenant that you really wanted for the space and court them. And for the last year and a half, it's been kind of the opposite. Particularly with good spaces, we've been seeing competitive situations for leases downtown, multiple bidders, and the rates are actually pushing kind of an all-time high for retail, particularly downtown. Mountain's still viewed as a little bit more seasonal, but the downtown's been strong. And I think that's a good barometer for people's belief, in a sense, that Steamboat is going strong. People are bringing businesses and are willing to spend some money to get a premium spot to the customers they think will be there. On the development side, a lot of land purchases in the last year and a half. That includes up at the mountain. We sold land in Ski Time Square, adjacent to Ski Time Square. Downtown, the entire Riverview piece sold out, which is future development land. There were a bunch of small infill lots in downtown, which are suitable for probably 4 to 6 unit condominium projects. Those have traded, and projects there are starting to go into planning. So again, I think if people can picture an exit price to support the land value, we're seeing people, enthusiastic and optimistic about what they can do in terms of, bringing new product to market. And that feeds a little bit, obviously, into the residential discussion, where we just haven't delivered any new residential at any scale in a very long time. So people are thinking there's a chance to fill some of that higher end product, again, at the base and then also in the downtown. Like the residential market, there's still a few people who are Pricing best based on, I guess, future expectations would be the way to put it. There's some parcels that have been on for a long time that simply don't make sense given the current economic climate. You know, they would be too expensive to buy, too expensive to develop. But with the diminishing supply, people are trying to lock some of those up. And, or at least the sellers are hoping someone will lock them up. And that could be considered a play for the future. It may also be that at some point the prices rationalize and come to where the market can kind of do math that works around those. You know, industrial, we're still undersupplied in terms of warehouses. That's a really tight market. Office is somewhere in the middle. We have office, but the demand has slaked a little bit since the end of COVID-19. We have fewer small individual office people looking for space. And probably, you know, a few more people bringing companies to town and some enthusiasm. I mean, notably, Big Agnes purchased the old police and fire station from the city. They closed that deal this year, so that's going to be, you know, a nice downtown office that'll permanently be theirs. So fair amount trading. So yeah, it's a mixed bag. I think a little bit like residential. There's some great product out there. There's some enthusiastic people moving forward with projects, and there's still some product that frankly is probably overpriced and will be for the foreseeable future. But again, those may be an opportunity if someone just wants to own something. Notable sales, Slopeside, the restaurant traded for a very, very high number. Obviously, you know, banking on having a premium location at the base. That's the one that stands out recently, and we'll see what else comes as we get into fall and our new ski season with all the improvements at the mountain. Thanks.
Hello, I'm Justin Reed with the Paoli Group in Steamboat Springs. I specialize on the residential side, and I'm here to bring you a market update on the residential side in Routt County, both single family and condos. When you check out the data for Routt County at the end of Q3, you can't really pinpoint a single trend that tells the whole story. But there are some surprising data points that are out there. Buyers will be happy to know that sellers are open to negotiations. Currently, the average sale is 95.3% of list, the lowest it's been in the last 5 years. And if you've been keeping an eye on the market, you'll notice price reductions happening quite frequently. The days on market are also increasing compared to the last 2 years. But is this a buyer's market? Well, not really. The inventory is significantly down. For almost every month except for August, we've seen the fewest number of homes entering the market. In September, the number of pending sales outpaced the number of new homes coming to market by around 20%. This has left the market with the lowest number of active listings as we enter the fourth quarter for the last 5 years. Also, in September of 2023, the average price per square foot for both single family and condos reached a new high point. But this was just a slight uptick compared to the pricing plateau we've observed all summer. So what's the takeaway? There are definitely active buyers out there, but they're becoming more price sensitive. They're willing to pay market value, but if they can't support it with comparable sales, they're not willing to push the market. This mismatch of expectations between sellers and buyers is leading to an increase on days on market and the rise in negotiations. If homes are priced reasonably, they're selling, whether that's at the initial listing price or after a price reduction to align with the market.
Well, thank you so much for joining us today. It's good to hear from Brian on ranches, Justin on residential, and I hope I was able to give you a little bit of color on the commercial scene in Steamboat. You know, as always, we're here if you have any questions. Feel free to reach out anytime. Please do follow us on YouTube if you want to keep up to date on the videos. And we look forward to working with you as we head into this upcoming ski season. Thanks.